Every day at 3:30 p.m. the stock market closes. But have you ever wondered who decides the closing price of a stock? That one number is far more important than most investors realize. It decides F&O settlement, index values, ETF performance, mutual fund NAVs, and even the value of your portfolio. And after years, SEBI has completely changed how this closing price will be determined. So, what exactly has changed? Till now, the closing price of a stock was calculated using volume weighted average price, or VWAP, of all trades executed in the last 30 minutes of trading between 3 p.m. and 3:30 p.m. Going forward, that won't be the case for eligible stocks. Instead, SEBI is introducing a closing auction session, or CAS. Interestingly, this isn't a new idea globally. Major exchanges like the New York Stock Exchange, Nasdaq, London Stock Exchange, and the Hong Kong Stock Exchange are already using closing auctions, where the closing price is discovered through an auction instead of continuous trading. It will help in discovering a fairer and more transparent closing price, especially because it is used for derivative settlement, index computation, and mutual fund NAVs. So, how will this work? From 3:15 p.m. to 3:35 p.m., there will be a separate 20-minute closing auction session. First, a reference price will be determined. Then, investors can place buy and sell orders. Towards the end, the order entry window will close randomly anytime between 3:28 p.m. and 3:30 p.m., making it much harder for anyone to time the final seconds. Finally, the exchange will identify the price at which the maximum number of buy and sell orders can be matched. That becomes the official closing price. Now, the most important question: how does this affect you? If you're a long-term investor, almost nothing changes in the way you invest. But indirectly, the closing price used for your mutual funds, ETFs, benchmark indices, and derivative settlements will now be determined through this auction mechanism instead of the last 30 minutes VWAP. If you're an active trader, especially someone trading near market close or on expiry days, this change becomes much more important because the closing price will now come from the auction. Initially, this change will apply only to stocks that have derivative contracts. Other stocks will continue using the existing VWAP method for now. During the closing auction session, only market and limit orders will be allowed. Stop loss and iceberg orders won't be permitted. The equity derivatives market will continue trading until 3:40 p.m., while the post-close session in the cash market will continue afterwards. Also, the circular also brings another important change. SEBI has aligned the framework for pre-open auction session, which happens before the market opens, with the new closing auction session framework. Basically, the rules governing both auction sessions will now be consistent, including aspects such as the auction process and order handling. The new closing auction session will be implemented from August 3, 2026, while the updated pre-open auction framework will come into effect from September 7, 2026. So, the biggest takeaway for you is this. This isn't a change in how the market closes. It's a change in how one of the most important prices in the entire market is discovered. And as India's markets become increasingly driven by ETFs, passive funds, derivatives, and institutional participation, the closing price should reflect the collective consensus of the market, not just the trades executed in the final 30 minutes.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.